will explore recent health insurance rate increases and the effect that those increases are having on hardworking Californians who are struggling to make ends meet and to continue to provide health insurance and health care coverage for themselves and their families. In these very difficult economic times, health insurance premiums are skyrocketing. Health insurance premium increases are soaring above the annual percentage increases for wages, inflation, and medical costs. More than 6.6 million Californians are uninsured, and as rates continue to climb, we can only expect to see that number increase, and more Californians have to make the difficult choice between purchasing health insurance, which has reduced benefits, higher deductibles, and less suitable for them and their families, or lose coverage altogether. As someone who has spent years fighting for quality, affordable health insurance, I find the recent announcement by Anthem Blue Cross of their up to 39% rate increase to be both astonishing and tremendously troubling, coming as it does on many prior years of rate increases. How are Californians supposed to afford health insurance with these rate increases? What level of profit is enough? When I first heard about this rate increase, I immediately called upon the CEO of Anthem Blue Cross to stop the rate increase. We understand that Anthem Blue Cross has granted a reprieve of 60 days to their policyholders until May 1st, but they have every intention of moving forward with the rate increase after that date. There is an inherent conflict between consumers who need health care and profit-driven corporations who seem to know no bounds in pursuing profits at the expense of policyholders and patients. That's why so many of us advocate for single-payer universal health care reform as a way of providing coverage for all Californians and all Americans. One of the best ways, I think, to illustrate this conflict is to talk about what we ordinary Californians describe as health care, which is described by health insurers as a medical loss. Every cent of every premium dollar that goes into health care is actually viewed by these companies as a loss that's not available to cover administrative costs, executive salaries, and profits. The very term medical loss ratio, which is used to assess the relative share of the premium dollar that goes to health care, is itself an extraordinarily sad commentary on health care being treated by an industry as a loss. Insurers attempt to justify their excessive rate increases by arguing that medical costs are increasing, when in fact premium increases requested by insurers are up to 5 to 10 times greater than the growth in national health care expenditures. In fact, according to a recent report, recent economic data show that profits for the 10 largest insurance companies increased 250% between 2000 and 2009, 10 times faster than inflation. Last year, as working families struggled with rising health care costs and a great recession, the worst recession we've ever seen since the Depression, the 5 largest health insurance companies, WellPoint, which is the parent company of Blue Cross, United Health Group, Cigna, Aetna, and Humana, took in combined profits of $12.2 billion, up 56% over 2008, according to this report. In one quarter alone, WellPoint reported profits of $2.7 billion last year. And recent reports show that the CEOs of the 5 largest insurers were each compensated up to $24 million in 2008. At the same time insurers enjoy these profits and CEOs take in millions, Californians struggle to keep their jobs, their housing, and to find affordable, quality health insurance coverage. People from across the state have contacted my office for help after receiving notice of increases in their premiums. Blue Cross is sadly not alone amongst health insurers in foisting excessive rate increases on California's consumers. I've called this hearing of the Assembly Health Committee today to shine a light on the problem of rising health care costs and to focus on what we as policymakers can do to prevent more Californians from losing their health care coverage. Today we'll hear testimony from health insurers, consumers, and regulators about recent increases in health insurance rates. For years now, I have advocated for a solution that is immediately available to us, and that is to extend Proposition 103's effective and successful rate regulation over auto and property insurance to health insurance. Proposition 103 has saved consumers tens of billions of dollars, and the insurance industry has continued to thrive. There's no reason why we shouldn't treat our health just as well as we treat our autos. It is my hope that after this hearing, and after we hear from many small businesses and consumers and others about the impact of these rates, the Legislature will take the action necessary to protect Californians from excessive rate increases. And I'm delighted that President Barack Obama and United States Senator Dianne Feinstein have joined the fight for rate regulation. But we can't afford to wait to see what happens at the federal level. As important as it is that we see continued progress there, and as hopeful as we are for success with regard to national health care reform, we in California have the means, the ability, and the authority to protect ordinary Californians and businesses from these outrageous rate increases. It is my hope that we will do exactly that.